So this is what happens, right? It's like when you look at the market, I want you to consider this. So it'd be good for me to use the guide so that it try to explain what you might have already known. So if you come to Confluence way, okay, so I just want you to think about this model like this. This is basically how I trade, right? So the first thing you want to get right is this directional analysis. This part is the main thing. If you get this right, this becomes easier to find, right? So for example, if you come on the chart like this, what I try to do is, of course, if you look at gold from the weekly time frame, you see that it's bullish, monthly is bullish, daily is bullish, and so on and so forth, right? Now, sometimes what happens is that you have consolidations like this, consolidations like this, consolidations like this. But in general, we see up moves. Are you seeing it? Here, there was a bit of consolidation too, right? And then we see it going up afterwards. So it is almost like we are doing this. We are doing this, and then we continue. Now, this is what you want to see to be sure that you're actually in an uptrend, right? Now, once you've established that we are in an uptrend, which is the case with gold, as for example, the first thing you want to see is what you want to see: higher highs, higher lows, higher highs, higher lows. Okay, that's market structure. Okay, if we're in a downtrend, of course, you want to see the reverse, right? Like this, right? Very good. Now, with that being said, sometimes it can get a bit complicated, right? It can get a bit tricky. So, for example, let me show you a good example here. Is here, if you look at the price action from all the way here, try to increase it so you can see where. Okay, so for example, if we take from here, what you see is that we were going up like this from here, from to here to here. Okay, so basically we are trading up, right? You can see it. We are trading up, and then we come down. Now, when you look at this part here, we basically don't take out these highs here, but we start trading down. So we're forming our lower lows, and then afterwards we range a little bit here, and then we take this back out, take this out, take this out, and then we continue. Are you seeing it? Now, it's very important for you to understand this part from the higher time frame. Understand structure. This is the most important thing. Now, once you understand structure now, of course, you don't take trades on the 4 hours, right? You don't take trades on like the daily time frame. You take trades. You want to take trades on like a very lower time frame. So you want to take trades from like, let's say, the 5 minutes, or for me the 1 minute, if possible. Yeah. The reason why I'm doing that is because I want to ensure that my risk to reward is like this, like 1 to 10, right? It is significantly high, so that even if I lose like maybe 2 trades in a row, I'm still fine in the long run. It doesn't matter, and like losing doesn't hurt me, because I know that like I just need to get the one trade right, okay, and I'll balance and make some profit. So even if you have a low win rate, as long as you can stay consistent with your amount of money you're risking and a consistently high risk to reward, then that is definitely a good thing, right? Now, having said that, the next thing you want to see is a good idea or a good trade. This thing here is, now this thing has a lot of text, man. Let me just walk you through one trading idea, right? Now, I might just need to use a new chart here so that everything is clear. Let's go to Rwanda blocker. Yeah, it's clean here. Now, what I want you I want to show you just this area of price action here. The number of trades that we could have gotten in this area. So we would simply just let's color this white, and then we use let's color this white, and then we use a black outline. Okay. Now, what I would try to do here is I would just rewind price to somewhere here. Now, of course, we know that place was a bit of a range there because we've seen the price action ahead of time. But I will just try to explain to you still how it looks like in general. Now, when you come to the daily, right, this is where we were on the daily. The things that I want you to start noticing here is price has traded all the way to here. So this was a low that created this high. Now this high had this low, but this low failed to create a higher high. Okay, so what happened is that we had something like a double top before a fall below. And then you had another lower high, and then this. Normally, when you see this player, which is like this, what we will see here is that this is the main low. Now, so what I was saying was that when you have this, we were somewhere around here, and this is basically what you've extracted. What you want to start to see is you want to start to print the structure. So the most recent low is this one. Okay. So it's more like if you have structure like this, you know, price is fractal, right? So if you even take this leg here, we could have something like this inside it. You see, you can have a smaller market structure within it. Okay. Which is within this leg here on a lower time frame. Sometimes on a higher time frame, you can actually have that. So this whole leg that is breaking this structure here, you can see that we have what a high there, a lower high here, and then another lower low here after this one. I seen it. Right. Now when you go on H4, you'd have a whole different more structure or whatnot. Now what I try, the way I interpret market structure is a bit different from what is online. The idea there is that when you have this first break, what we say is that we say that this is a possible fake breakout structure on the daily. Why? Because whenever you have price going up, like you're in an uptrend, let's say you are going up like this, right? Now, when price does this, do you say that we've broken structure? No. 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 When do you say we've broken structure? When this happens. So the first break, what it tells you is that, hey, it's possible that we'll break structure. But it doesn't tell you if we've broken structure. It is when you have the second one now that you know that we've broken structure. And now sometimes what happens is that after the second one, you might have something like this. Is this a breakout structure? No. No, not yet. So this one tells you that this is what a possible breakout structure. And usually what happens is that this is always a liquidity move. Price is trying to grab a lot of sellers or buyers here and then take everyone back out and come down. Okay. Yeah, based just on structure. So when you look at this thing here, all you say here is that, hey, it's possible that daily is breaking structure. But then we don't know if that will be true unless we have this low taken out again, this low here. But as you can see, this low never gets taken out. And so basically all the second part here of this trade is basically like this. This is what has happened. So this doesn't take out, and our price goes all the way and takes back out this high. And so everything you see here is just a build up, but we know that we are still bullish. Do you understand? Now, of course, this is what the daily tells you, but you need to come down to a lower time frame, maybe on the 4 hours, to kind of understand the price action. The same concept I've told you is the same concept we apply here. First thing you want to identify is where structure is. Here we had this high here, we came down here, and then we had another high here, we had this low. This high got taken out, but it's a possible fake. And then we had it play all around here. This or everything here you see is internal structure before it gets taken out. Now I'll drag this out here just so you can see it more clearly. Remember that this is where we came from with price. We came from down here, came up here. And so if I try to mirror this price, this is what it looks like. Right. So if you take if you just take this part of price here, from here to here, this is it here. Like, now what I'm saying is that when you look at this thing from this perspective here, it's almost like, if I draw it well, it's almost like this. Okay. And then we came down, but then we had a possible fake here. And then afterward, what happened? We had this break back down. Do you see it?
Yes.
Good. So everything that you see inside a structural level. So for example, if you have price going up, so if you've understood this concept, I will try to now explain what is happening inside this part. So now when you look at this thing here, there's something I want you to see is that when you had price bounded in this zone here, I want you to see something is this part here that I have drawn there is this part here. Sorry, it's this part here. This was the low. And then this here is the high that caused the fake break of structure. So I'll try to delete this here, and then we'll come back to this. The reason why I'm explaining these things in detail is because when we go to this trade idea, I want to show you, these things will start to make sense. Now, whenever you have price within this range, so when you have prices coming down like this, right, and it's coming down, what you are careful to look at is when it creates a low and it starts going up like this. Pay attention to what is inside here. This is what we call internal structure. Anything can happen inside here. Anything. Price could do anything. It could even confuse your brain, right? And do anything. Okay? But what you are concerned is that, do we break up here? That will be a fake break. At least if it's the first time. Okay?
Yeah.
And that is what happened here, is that we were coming down. We had this level and this low here, and then it got faked out by this bullish candle. Before we came back here, prices within this range, and then we break back down. So this is basically what happened here. Okay. Now, of course, the more you learn price action, the more it is easier for you to see these things very, very easily. But this is basically the play that we saw here. Okay. Now, fast forward, I'll just try to mark out this whole structure quickly. And what I want you to understand is that higher time frame structure takes precedence. So than for us to be worrying ourselves about demarcating the whole structure here on the 4 hours, what I can simply do is I can just jump to the daily time frame, and then I can just do the demarcation here for you to see. First thing we know is that this is a possible break of structure here. And so this here is our main high that we can look for price to come and take out eventually in the future. So what we see here is what? Remember what I told you before is that when price is in this kind of range here, everything we have inside here is what? Internal structure. Okay? Because this is the entire leg. So basically, this is what? An internal high on the daily. Do you understand?
Right.
So this move from here to here, what does it do? It causes what? A break of structure of the internal high on the daily. And so this here, we can say what is a bust on the daily. And then again, what do? We have a pullback and then we have another bust. Okay, so now we have what? A second bust on the daily. Now remember that there are some concepts here that I'm rushing over, but they are very important for you to understand. Is that when you have price like this, now if this is the next leg, right? And then we have a pullback like this, for you to know that this thing will get broken here, you need to see at least what? Two breaks of structure. Sometimes you see two break of structure. Sometimes the move can be very fast and then you just have it slide down quickly. Okay. But when it may be in this situation like this, we were going up, we have a possible fake break, and then now we have had two internal structural breaks like this. Be very sure that it's only a matter of time. These highs here will be taken out. Okay. Like it happens.
Okay.
This is how markets work. Okay. So you need you need at least two breaks. How is it called? You need at least two breaks like this to indicate that we are moving down. Okay. So if once you have price like going up like this, if it comes down, what you are interested to see is that you want to see a slow build up sometimes. Once you have two consecutive breaks of structure, like one, two, just be sure that, like this, for example, when price comes and is doing whatever it's doing, know that it will come and take out this high because we've had one, two breaks. Okay.
Okay.
Now, in a similar way, when you have two break of structure, you confirm that the trend has changed, just like we mentioned in the first video, right? So if you're in an uptrend like this, like we mentioned in the first video, this first break is not a break, it's a possible break. Now, when you have a second one, then we've broken structure. Do you understand? In a similar way, when you are looking for continuation of a main trend like up here, sometimes price may come down, as you see in this situation here. But then if internal structure starts to shift like this, what does it tell you? We are now getting ready. Do you understand? So 1, 2 is only a matter of time. We'll take out this higher. Because one thing I know is that psychologically, we know that even if price comes back down to break here, this is a possible fake break. It could just be a liquidity sweep. We just want to get more buyers to join in. Okay? And then what happens? The real move comes up. So why would I push the market here for a fake sweep when I could just easily move market to here? You also have to think about people who are moving the market, right? It'd be very expensive for you to push all the way back down here before you come up. So sometimes they might just come up before they come down. Now, let's not even start to dwell on that right now. It's just for you to understand these basics of market structure, and then that will be good to go. Okay. And that is why you see when you're marking this thing here, the level that we know that price will not break is this level here. So after this break here, this is the new low. So when price broke here, this was the low. When price broke here, this was the low. Are you seeing it? Now this is the level that you know that price should not break below. So price should not break below here. And so any region within here, you start to look for your buy orders. Okay. Now, with that said, if price comes down, for example, like this, are we bearish now? Of course not. Because this is what a possible fake internal, not external, a possible fake internal structural break. So we can still be looking for bullish moves. That is why you see there are some times when you have a massive sell, but then after you have a big buy, it just continues. Because the sell was just to grab more buyers, more liquidity. Remember, in the market, for every buyer you see in the market, for every buyer you see in the market, there must be a matching seller, right? It's always like that. So this is basically the theory of markets. It's like we would only move when these two are balanced. So let's say if sellers are small like this and buyers are a lot like this, buyers basically will control price up. But the thing is that they need a matching amount of sellers. Okay? So think about it this way. There are this amount of buyers, sellers are this few. What do you think people will do? These guys here, some of them they'll turn some of their positions into sell others so that sellers can increase. Or they will create a situation where sellers will come into this market and then they will take them out just so that there can be a matching amount of buyers and sellers so that they can move price up, so they can fill their orders, they can have a cover. Do you understand? And basically that's a philosophy behind the way I trade is that it's based on the fact that we always need to look for matching buyers and sellers before we move price. But then anyways, we are now here. This is where our price action is. Now, this is the 12th of December. This is what we have. Okay, price is in this zone. Now we know that we are bullish. We already know we are bullish because of all this price action that we've been tracking, right? Right up onto here. So we know that this is our level of failure. So price should not go below this zone. Right? If price should go below this zone, then we are wrong. We are actually fucked up a little bit. Because still we can still buy if it's just the first break, right? Now, what I would try to do here is now that I know that this is my daily structure, this is my point of failure here, or at least an indication that I'm failing. What I'm really interested to do here is I want to look at 4 hours and see from this point where we can start buying. Now, the first thing I want to do here is the same thing you do on the daily, you want to try to do it here on the 4 hours. Try to demarcate where structure is and see how things are aligning. Now, if I'm looking at this chart here, of course, there are some things you start to see is that this was the low that created this high here. So, for example, this low here, you see this one, it led to this high here that took out this previous high. Have you seen it? So this is a significant level here. So you can even start drawing your structure from there. Now, so basically, this low created this high and then broke below, created lower high, and then broke below. But now, one thing that is very important for you to note here is that, which is something that gets very sometimes, is that you need to kind of understand internal structure and external structure. Okay. Daily, remember that in the daily, what we have here is internal structure moves on the daily. Remember that the main move here, this high that was taken out here was what external was not external, it was internal. It was an internal high that was taken out when I was showing you about the daily, right? Right. Good. Now, what we are seeing now here, this build up here on the daily is internal structure break to break what? External structure. So internal structure break will break external structure. 2 breaks will break external structure, okay? Now, when you come to 4 hours, the same concept applies, okay? So let us try to understand what is happening in this zone here. Now, sometimes for you to understand it, you can try to mark out structure from below to up, right? So, for example, this was the high, got taken out by this. Pull back. This high again got taken out here. Pull back, got taken out. Pull back, got taken out. Pull back, got taken out. Sorry. Pull back, got taken out. Pull back, got taken out. Okay. Pull back again, got taken out. Pull back. You understand? So, When you're looking at it from here, it gets very small at some point, but this is a break here, and then push up. This push up here takes out this high, but this one is a fake because it's the first one. And what happens? Liquidity sweeps this. Now, this thing gets very beautiful when you look at it from this perspective. It's like if I go on the 1 hour, for example, in this same zone here, you see what I'm talking about. Let me go there. So this was that first break we showed you. I showed you. Second break. What do you see? What does price do? It goes up here. People are thinking we are buying. No, no, no. We are not buying. Is that now at this point, what has happened is, remember these are boxes. Buyer, seller. Who do you think is doing this play here? Who do you think is doing this play here? This massive buy to sell? Who do you think is doing it?
Market is adjusting so that there can be enough sellers to
Very
fill
good.
out.
Good. Exactly. So now we are prices here. Prices at this point here, right? We are here at with price. And now we are like, hey, we need to go lower to this level. But guess what? We don't have enough sellers to push price down. So what do? We need to induce more sellers or bring more buyers into this market because we have a lot of sellers sitting here. But those sellers cannot push price down because we don't have enough buyers. So we need to induce buyers in. When buyers are buying, and there are more buyers coming in, more buyers coming in. And then there's a matching level of buyers to fill the seller's position, the same box sizes. Okay,
Yes.
so initially sellers were a lot. So you can see that from here. For example, at this point, style, let's go to background red. So at this point here, sellers are plenty, but buyers are few at this point. And so sellers are like, oh, we cannot really go down if we don't have enough buyers to fill our orders. And so what do they do? They create a situation where buyers come in, but it's only a trap. And so once now you see this, that's why I say this is what a possible fake was on what H4. Sometimes H4 and H1 could have the same thing. So this could be H1, H4 or H1. And now this now, once it's confirmed, that is a possible, how do you know it's confirmed? That is a possible fake when you see it take out this low. And we clearly see it here. You understand? Very good.
Yeah.
Now, this thing happens very often, okay? If you're looking at your chart, you see that this happens a lot often, and you can actually make a lot of money from this kind of moves because they're usually very big moves and they happen very quickly. Now, let us try to move to now how we are seeing how it's going. So this was a possible figure, and then this was a break here. And then after again, price leaves from here, Chris, this break here. Now, again, this break here is a possible fake, right? We don't know if actually price has changed. So this here is a possible fake. Okay. So I could say that this is a possible fake. Was possible fake was on H4. Let me bring this one back here. And then we would now say that okay, we were right. So we'll put a plus a good arrow here because we were right to understand this was a possible fake boss. And also there's a way in which you could have had a trade idea from here to actually sell all the way down here. But right now, let me show you the trade idea. So if I'm going too fast, please let me know, okay? So let me show you how this trade idea could have played out, okay? Let's go to 5 minutes. The reason why I'm going to 5 minutes is like I show you, these moves are really quick. And what you want to always see is you want to get a good time window. So the time window I'm looking for to trade here is I trade Tokyo and New York. Tokyo is from 1 a.m. GMT to 3 a.m. GMT. New York is from this to 4. So basically, this is the window I'm looking to trade this move, okay? If it happens between this time, oh yeah, we're good. So this is the move that was going to take out this structure. So let's see. Now, it takes it out at what time? This is exactly, if you look down here, this is around 2 Let me remove this one so you can see where. So look down, this is 14:25. So this is like 2 p.m. GMT. So this is, yeah, so this is like New York Open. This is a very good time. Now, of course, there's something that I haven't told you, but there's also inside bars, right? It can get a bit confusing here, but the thing is, inside bars, there's kind of they form structural levels also that you can trade off of. Now, what you would see from here on this training material is where we are right now, which is we know the direction, we know that it's a possible fake break, right? Now, what we're interested in now is knowing this points of interest. Okay. Now, the points of interest now will lead us toward inducement to break structure and so on and so forth, and then the time window. So basically, we've identified this. This is the difficult part. Then the next part is this part. Okay. Now, what I want you to see here is that we know we are trading at the right time window, New York session. We have waited for, so we have gotten this right. The time window is New York. We've gotten that right. We want to identify the point of interest, and then we know the model to use. The point of interest is like an order block, okay? And what I was trying to explain to you here is that when you have price, sometimes go like this, like this, like this, and then you have something like this. Now, you see this move here? This move here is actually an internal structure. Okay, this is internal structure. So it is, think about it like, when you look at it from here, you see these colors that are golden, right? Think about it like price is going up. We have a higher high here, but then we have a high that is not higher than this previous one. And then it also has a low, which is not lower than this previous low of this candle. So it is looking like this candle is within this other candle. We say that is an inside bar. That is a good structural level sometimes that the market creates. It creates on all time frames. Now, this low here becomes a very significant low for us because the same theory here would be like, if price is to break, what do you think will happen? Price here, if it breaks this level here, that becomes a significant thing. Right. Now, if it goes back up here, it can break this, and then the trend has changed. So my idea here is that this trade idea that I'm about to show you here is just based on the fact that, hey, do you know what? We know that we are bearish, but we don't know where we'll be selling from. And then we have this interplay here, whereby price breaks up. So we have a push up, which means that this high here is taken out in something we call an inducement. Why do we call it an inducement? We call it an inducement because the idea here, inducement. So the idea here is that, remember that for every seller for everybody, there needs to be a seller, right? So what do we do? We need to create a situation where buyers will be excited or think we are going to buy, and then you take them out because this move is to fill sellers in, and then sellers come back to mitigate, and then the real move down continues. And that's exactly what this inducement break of structure mitigate model is about. Okay, you create a situation where we can take these guys out. So you come here, for example, this is it. Create an inducement. You break, you come back to mitigate, and then the move continues. This is a good example of how it plays out on the chart. Okay, inducement here, break, price comes back here, key time window, sell. Now, this is what we're about to see about this on the 5-minute time frame. And why is it 5-minute time frame? Because these moves happen very quick, especially when it's a possible fake break of structure. It's very quick moves. Okay, it's just liquidity. So if you don't take this very early, you miss it. because it's happening on a good time window, all I try to do now is just you just set a stop loss and take profit. And where we target, you can target all the way back down here because you know you break it. For more refined entries, of course, you can go all the way to 1 minute and so on and so forth. I try to have my stop loss is not always more than 50 pips on gold. So for me, I'll push it a little bit here so that it stays within my required distance. And that's it. Tap and then goes all the way down. That's it. So this is how this moves are. So you can see how precise some of them are. Sometimes it's like sniper, boom, and it goes down. Right. So so that's how you can trade these moves. Once it happens very quickly, especially when it's a possible fake. Okay. That's one way in which you could have traded this. I just wanted to show you that. But again, we go back to where we were, which is we were somewhere around this daily. Now, as I'm showing you this, of course, there is a lot of things that you might have questions with, but feel free to pause me at any point and ask. So this is where we were, and we're trying to look for that our buy trade, right? Or whatever trade we get in that area. Now, I've already shown you how you could have taken one of those trades there. Very quick trade there, you make some money. Now, again, we have a similar play here. This low here, what happens is that price goes and takes this out, but we know that this is a possible fake break of structure. Why? It's the first time, and we're in a downward trend here on H4. So again, you can pull this here. Once this one happens, then what happens is that what this was not a possible fake. It was actually a real fake. So we changed back the name into this. And now H4 has broken structure twice.
Right.
Good. Now, whatever you see that happens down here, like something like this becomes what? A possible fake break of structure on what? H4. Because we've now, remember, we've now switched. You see now? So we've now, from here, we had this first break here, and then we had a second break. So if we are coming to break here, this is just the first time. So now it's possible fake. Until we have a second break of this low, we can call this what it is. So you now see that in this first case here, this was the low, and then so basically this was the low that caused this break. So in this zone here, this is the two levels you are looking for price to trade within.
Okay.
So we have this level here and this level. And now when you have again, so price can come down and do everything, takes it out. And then now this becomes a new level we are trading within. And then price comes and causes a fake break and then goes back all the way up to break it out.
Right.
So that's how sometimes you can see some of those trades, you can even hold them for like days because you already know the concept from here. Imagine you're holding a buy trade from here all the way to up here, you know? So again, we can forward the structure all the way to here. And then this becomes what? A breakout structure on H4. Of course, this now becomes the right thing we did. So we can put a star on this because we're right to think that this was a possible fake. Continue again. We have price here. Another break here. H4. And then what do you see? Now remember, I want to open this box up. This high created this low. And then this low is what created a high. So this here is what we call a possible fake. Boss on H4, right? Because it's just taking out this low here for this candle. So you see, for me, I take the structure as the opposing candle based on the opposing candle. So if we are going up like this move based on this candle that comes down is what we call the new higher low. Basically it's formed by this candle. Yeah. And before you continue, so each time I don't trade based on the theory that it needs to, if you have a move like this, it has to come down all the way more than 50% before it goes up for you to consider this as a retracement. No, I don't analyze based on that. If move is going up, as long as you have an opposing candle continue, this year is structure. You cannot ignore it.
Yeah.
Now, if this structure was taken out, this is a fake because we need two of them. Okay. So that's how I mostly try to trade. All right. So let's
So in most cases, we should always start our analysis on
the
the
daily.
daily before
Yeah.
we move to April.
Yes.
And then we go lower to H1.
Yes. Yeah.
What about M15?
M15, yeah. I've not even shown you like the whole M15, but there are entry models based on M15. I'm trying not to complicate it now because now I just want you to understand the general idea. You see, like sometimes the entries are based on M5, sometimes they're based on M15, sometimes they're based on H1. So the concepts in themselves, if you get this foundation, then now when I start getting, it starts getting a bit complicated, and I start adding some things, you understand it better. So you see, like where we are right now is this is where I want to trade. I've already established that we are bullish, 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 right? And we've already had two bullish here. There's a possibility that we'll take out these highs and create a new all-time high. Now, now where we are right now is that there's a possible fake break of structure here that we are trying to look to see what is really happening here. So this is, again, I'll try to demarcate the times when we trade. We trade New York, Tokyo. So time and price is very important. So
so like this trade, right?
This one?
This first,
yes.
Yeah, this first bit of structure here.
Yeah.
So right where the price is right now.
Okay, this one, yes. You mean
if you were monitoring this market, would you be able to take this break of structure?
Well, what we can do is that we can go and see if there's even a possibility. So one thing I'll try to see is let us try to find out.
Okay.
So for example, what I'll be interested to see is, do we have first a break? So you need to wait to see what we saw on the last one. Right. So this was, So basically this was on M5, this is the recent high. And so this is the area I would want to be looking to buy from. But you can see like price is not coming to it. Right. So normally this is what you expect is after this break, you want a sharp move and there you go. So this is definitely a trade we will not have taken. Right. Now, if you also come to this other possible fake break here, let's see if you could have had an entry here. Again, the time here was 6 a.m., 7, which is good time. Now, the good thing is in this zone here, we could have had a trade. So you can see that this was the last high that got taken out, and price came back into this last sell candle somewhere around here. And this was the low here. Now, of course, I try to keep my entries between 50 pips. I don't want to go above that because then the trade becomes very risky for me. Now, in that kind of situation, in this case here, I would have missed this trade. Right. Yeah, I would have missed this trade just because of the optimization. Right. But you can see how after this break here of this very recent high, price pulled back into this zone here and then shot up massively. Like I told you, these moves are always very fast. So even when you have this break here, you could actually this in this kind of situation, this is a swing trade. So you can actually swing this position all the way back to up here. Yeah. Right. And basically, let us even take a scenario where I try to stick to I try to, let's say, go up to 10, or let's say 8. I was fine with 8 pips, 80 pips. This never happens. It's always below 50. But let us say I did this, which I will not do actually, but let's just use it hypothetically. from here to all the way to here, this is 10 hour, right? Risk reward. So you can see like normally the wise thing to do is that you take some partials as the trade is progressing. So around here you might take, let's say, 25% off, around here 50% or 75% off, and let the rest to run, right? So there's definitely this moves generally happen. It's not rocket science. Like these things happen often, especially when you understand where you are taking the trades from. For example, me, I know that there's a possible fake break here. I don't expect price to take it out this low. So if I take a buy trade very close to this low here, I'm very sure I can hold it all the way to break this other structure here. You see?
Okay.
Yeah, because price would likely not come back here unless we are going to break this low, in which case I would have broken even. So I'm safe. Yeah. So that's how some of these trades you kind of play the mental model for them, and you know that okay, good, this is what I expect, this is what I want to see. If I'm entering now, this is what I can wait for, and stuff like that. So it's a mental model you're playing. It's like a story and you're building. Okay. So definitely this is a good trade you could have taken. Me, I would not have taken this trade because of my stop loss. I trade very, very low stop losses. Sometimes I miss trades. It's painful, but it's just what comes with the way I trade. All right. Now, if we fast forward again to this zone here, we are currently at what time? This is I don't trade at this time, so we start trading at 1 a.m. GMT, which is around here. So let's put 1 year and we'll forward price there. That's Tokyo Open around there. So I can forward price here. So this is where we are. And of course, what we'll see here is that we have this on the 1 hour. This is what we have. Of course, there is nothing really exciting currently here. Now, on M5, because we know we are bullish, you can actually go on M5 and try to look for areas of interest. This is an area of interest here. Why? This low here got taken out, and then we have a break of structure here before a key time window. But we are not trading this move here yet until we get to 1 a.m. So let's see. Now we've gotten to 1 a.m. But the issue now is that 1 a.m. price doesn't still come inside this box. So again, this trade is invalid. It happened outside the time window that we are looking out for, but the whole idea is the same. There's always going to be an inducement. Hey, we need buyers. So what do sellers do? We need buyers in this move. So what do? We create a situation where sellers can get in. When sellers are getting in and they are enjoying, you take them all out and you continue buying. So buyers are the ones in control here. So yeah, so it's very important for you to know this. Market structure tells you the direction, right? Order blocks and all these things, inducements and all not. It tells you who is in control of the market. So direction and control are two different things. Sometimes you could have a positive direction, but because we don't have buyers who are in control, you instead have but selling moves. It's important. What you want to see is that you want to be in a position where the direction and who is in control align. And that's why when you go to this slide here and you come to somewhere around yeah. Sorry. So when you come somewhere around here, I said that what price action reviews the direction. Other blocks tell us who is in control. Okay, these two together explain cause and effect in markets. You understand? Exactly. So it's very important. This statement here is very, very crucial. And most of the things that and most of these tips. Okay. Now, the reason why in this case here, in this situation, I'm going to M5, if you are wondering, is that in this kind of situation here, where price is so again, let me try to explain it in a way that is easy. But sometimes because I've been doing this thing for long, I kind of just know that this is the time frame you should go to, but I don't really explain why. Yeah. But the thing is, the reason why you're using M5 is because when you look at this thing from a candlestick perspective, This is where we were with this candle here. Normally, what you're interested in doing is you want to look for the closest points of interest or the closest order blocks at this time window. That's why I say time and price is very important. Okay. So you're looking at the points of interest close to that time window. Now, if we go to 15 minutes, let us open 15 minutes. In 15 minutes, where is your point of interest? Point of interest might be this one here. You see that this low here, inducement, breakup. Inducement here, there's an inducement here, and then there's a move that broke out. And so this here is a point of interest, but you can see that we kind of got partially mitigated at a wrong time window. Now again, inside a 15-minute order block, you can have a 5-minute order block. Now this is where the idea of optimizations now come in, is that you can now start to optimize slowly. Now you see that we're bigger, we're like this, right? You can bring it lower like this. Why? Because this is now the last M5 sell candle before they move that broke structure. And this is still our inducement here based on 15 minutes. Okay. And then this was the break here. And now again, you can even go again lower to what? 1 minute, 3 minutes, and do the same thing. On 1 minute, what do we look for? This becomes the entry here.
Yes.
Good. So that's why sometimes you can have I have trades where I optimize right to this level here, just because I need to stay within my 50 pip stop loss, of course. Now this is still 10, so this is still not even good for me. I might go lower than this, okay? But this is the whole idea, is that you can go lower and lower and lower once you get the best thing that aligns with your strategy, rules, and then you get your entry. But now I will not want to take a 15 minutes optimization block. Yes, seriously. Why? Because it is too big for us to have a good risk to reward on this trade idea. Look at it, the stop loss have to be like this. Do you see? For how many percent of my move? So it's not good. So normally if I had to take a trade based on 15 minutes here, I would have to have optimized and optimized until we got to at least this level here. And what is the probability for price to come here or for price to take off from this M5? It's higher for it to take off from this M5 here than for it to take off from here. So you see how I'm building the case, right? So it's a whole mental model. You are trying to answer questions like, okay, why is this not possible? Why is this possible? And so on and so forth. You understand? And now as you're doing those things, you are also asking yourself like, okay, good. If I am wrong and price should not take off from here, where could price take off from? Price may come back down to take off from here. Do you understand? So each time even when you are wrong, you are not really wrong. It's a signal. And that's why people who are still new in trading, they buy, they are wrong. They're like, nah, I'm right. They buy again. But why are you buying again? You just need to wait to see what the market is really saying. Because in this kind of situation, it just says that, hey, do you know, buyers are not enough to control the price upward here. We might need more buyers down to control the price upward. That's the signal. And that's exactly why there is this part of this lecture here when it comes to the Confluence way. Yeah. So he says, when you are wrong, do this. You can stay in the market as you know there is not sufficient buyers and sellers to move price in your direction. You can look to take another entry at a higher or lower order block, which is also what I've explained to you here. In this case, it will be what? Lower order block, right? Now, or you could wait for a re-entry model to play out for you to take a trade in the same or opposite direction. It's just simple. That's why sometimes even when you are wrong in trading, it's a signal. You should not be, there is no reason for you to be angry that you are wrong. It's a signal for you to have an even better trade, because for me, if I'm wrong in this trade, I'm happy. Why am I happy? It means I will buy at a very low price and we have what? A very high target to achieve. Good. So why am I sad to take the trade then? Or why am I even scared? I'm not risking much. And I have a high risk reward, right? So all of those things influence how you can see the market. Okay, anyways, so basically where we are now is this is what you are seeing. And of course, it gets very interesting here is that like you start to understand that okay, hey, we have this playing out here. Price is already taken off before our key time window. And now if our key time window here was 1 a.m., right? It was somewhere on here. But you see that price did not come back inside this zone at 1 a.m. So we're like, okay, fine. Well, it's just a bad day. Some of these things happen. You move on, right? You move on. So there is no reason why I'm coming to force a buy trade now because I see price taking. No, no, no. It's wrong. What I can do is that I can wait patiently. Maybe price will come back here. Maybe it doesn't. But I know that after 3 a.m. GMT, I'm not in this market again. So again, I wait. 3 a.m. is very far. It's around here. So I'm just playing this price for now. Look at what's happening. Maybe price will come. It doesn't. It comes really close, but it doesn't come there. And then just goes up. Now, as price is playing out and going, you can also be looking for other POIs. Okay, this is one POI here that we could have even taken a buy trade from. Are you seeing it?
Yes.
There was an inducement here. So you can see this was an inducement here. And then what? A break above. So this level becomes a good point for you to even have taken this trade here. And this is a good trade because it's within my 50 pips. And you can aim for 1:5, at least 1:5, and just hold it. So let's continue forwarding. Now I'm happy because we're still in the session. 3 a.m. has not reached. So let's go. By this time, I've taken out some positions off, maybe 50%, just so I can pay myself. And I've broken even. And then before you know it, let's see. Now we are out of that session. Now I'm happy that prices like this because most of one thing I realize is that Tokyo session always leads into New York, into Tokyo, into London session. So if this trade is like this, I can leave it open and break even and close some of my positions, like I've said. So let's go. Now I'm not worried because I entered very low and maybe price will not come here again. And I've taken out some money. Now let's go. Tokyo, London open is around 6. Pre-session is 6 a.m. So 6 a.m. is somewhere around. But anyways, it's just far behind here. So you can just have that in mind. Okay, let's go. We can play it faster. Price is still not on my TP. We can play it. Good. And we get out of the trade. At this time, basically, actually, what happens is I usually take this trade around 3. I go back to sleep. And the only thing I'm waiting for now, so all this time, I'm not even worried about this price action here because I'm sleeping. Whatever price is doing here is I'm sleeping. I don't care. I've already taken some of my profit. I've broken even. So I'm very safe on this trade. And now it can play whatever I want to play. Okay. Now this is one trade idea that we could have taken as well. Good time window, good entry based on M5 order block. We missed this first order block here, but we were patient enough to wait for another order block, and then we got a trade from it. You see? Now, if these two order blocks, this is another technique. If these two order blocks intersect like this, your stop loss has to be below this one.
Yes.
Okay, very good. Now, in some cases, this can get like this. So this order block here can actually serve as a liquidity sweep point. Remember what I said is, what I said was that control is what drives market. Direction tells you where the market is going to. Control is what drives markets, okay? So if we come here at this order block, because the machinery here is saying, hey, do you know what? We are buyers. Buyers need sellers to push price up, right? Now, at this point here, they'll say, hey, do you know what? We don't have enough people to fill our orders. So let us create a situation where buyers will think they are selling. And now we trap them and then come back to mitigate. Now, at this point here, if there are still not enough orders to drive price up, what do you think will happen? They'll come back lower to this point here, and they'll go up. So in this case now, this becomes a sweep. Make sense?
Mm-hmm. Yeah,
Very
makes
good.
sense.
Awesome. So basically, these are some things that you should just easily understand and know. Okay. Now again, I just have already traded, I've made money. All I need to do now is wait for what? New York session.
Yeah, for sure.
Now remember that this was a fake break here. So another idea could be you could decide to hold this trade and see if it's going to break this top here. Okay. But again, some of these things sometimes, if you make 1:5, if you're risking 500, how much is that? That's 2.5. So sometimes you could also take some of those trades early. And why would I advise you to take this one early? Because you do not take this trade at the very low here. If you take trades this low, you can afford to hold them. They can dance whatever they're dancing.
Mm-hmm.
Okay. But when it's in the middle like this, it's a bit tricky because price might come and not take out this level now, come back
And
down,
then
and then before it goes up, right? So is that some that's just something for you to be aware of. Okay. Now let us look at what's happening. Tokyo session comes. Sorry,
London.
London session comes. We've already made some money. We don't really trade London session. Around 6 year, we don't trade it because again the moves are very slow. You'll see it actually. You can see the whole range. Look at how small it is, right? It's just a very tiny
Mm-hmm.
range. You can see how all this range here, you just be up trying and wasting your time, but it's not necessary. If you're trading something like pound US dollars, which is a London pair, that makes sense. But yeah, you can see the price has changed, and it's always the case. So don't worry yourself. Okay. So now this is when things get interesting. Why does it get interesting? Because now we are at another key time window, right? And all you're trying to look for here is what? Let's look for points of interest. You see? Are you seeing? Good. So points of
Yeah.
interest here, again, what is this? Inducement, break. What is the inducement? Inducement here. And then what is the break? Break here. Are you seeing it? And now all we need is what? If we are right, price come here and then shoot up. You see?
Yeah.
And now you can decide if maybe my stop loss is, do I need to optimize? No, it's within my required. So in this kind of situation, you can just have this in here and you have your level here and just wait to see if we'll break above here. But I would like to always go for 1:5 at least 1:5. All you do now is now we're on 15 minutes, no longer 5 minutes, because all of our entry requirements have been met here. Again, I come back to this thing I was showing you before. Time window, checked. Inducement boss, mitigate model, check. Points of interest, order blocks, checked. Direction analysis, we are bullish, checked. Do we need optimization? No. Why? This is within our stop loss, right? Are we
Yeah.
scaling? Are we scaling in yet? Not really. We have not even entered the trade. So all these ones are things you consider after you are in the trade. But every other thing here, we have checked it. Just because you check all of it doesn't mean you are right. Doesn't mean the trade will always be right. I don't think so. So sometimes it can be a wrong trade, like this case. So you can see that basically, even though everything was checked, this is a trade that was wrong. Now, some people, because they think they know the markets, they know how the markets move. They've been trading for some time. They've not made a lot of mistakes. What do they do? They're like, no, price is trying to go and take my stop loss. So let me buy now lower. No, you are not following your strategy. Why are you buying lower? From which point? From which point are you buying lower? Okay, maybe you can argue that, okay, someone is trying to buy from this point here because this is another order block here, right? But
Yeah.
why are you going to be buying when price has not even gotten to it? Right? And then also there's something that I want to explain to you is what we call um momentum of candles. Candlestick analysis is very important. Why?
Yeah.
When you look at this candle, for example, this is before price gets to this block here. This is the H1 candle we see. This is a very strong. bearish indication.
Right.
So it can already tell you if this zone here will hold or it will not hold. It can tell you just from the strength of that candle. Do you see what I'm saying? So for me,
Yes.
looking at it and looking at this trend at which this candle is coming down, there's no reason why I'll be trying to get into a trade here because I know it'll be a short-term trade and it might not even work.
Mhm.
So all of those things matter when you are looking at the charts, when you are trying to analyze and when you are trying to make moves. And remember, each trade you take, the only guarantee you have is that you've lost that money. And so you want to take trades where the loss you are making is actually something you are willing to take. Okay. Now let's go back to 5 minutes here and just say that there was that trader who was trying to take this trade. Yeah. I mean, I will not advise you to do that, but someone will try to do it. Yeah. And they'll be looking at 1:5, which is up here. Ideally. And what happens? Again, they get taken out. Now, two losses in a row, right? But then if you had just understood that candle thing I told you about here, you'd have avoided yourself from this loss. Why? Because just like we're saying, sometimes what will happen is that what, even though we know that this price is coming to take out this high here, it can do anything within this area. This is what we call internal structure. Price could dance any kind of gymnastics here. It could do anything. So there is no reason why you're forcing it that it has to break up here now. It doesn't have to break now. Do you understand? So this
Yeah.
first failure here is just an indication, hey, do you know, maybe price is not. Now look at the candles that are printing. Are they very bearish? Are they very bullish? Look at it and analyze it from that perspective. Okay. Now, of course, this trade here is a valid loss. I'm very happy to take this kind of loss because then it tells me, okay, maybe I should wait. I should be patient a little bit. And everything I'm trying to do is that am I still within my trading window? Let's see, my trading window will end around 6, which is very close. It's around here. So very soon we're actually ending to trade. So maybe we don't make any money during New York session, but we made money in what? Tokyo session, right? So this money we made here will offset one of these arrows. So basically this day is a 4-arrow day. You see? So this is not a bad day. This is a good day actually. You made 4 arrows, which means you're risking 1%. You've made 4% of your account. That's exactly why I say, like, don't force. Come the next day and see. And remember, the next day we'll have an opportunity to trade. We'll most likely buy at a very low price and we can still target these highs. Okay. Now, this day is over. So I have to move now to the next Tokyo session, which is at 1. And now again, I need to again be watchful because the market is a market. Since at this point I'm not even trading again. I'm not even interested in what's happening in the market. What am I interested in? I'm just interested to see what price will do. Now you can ask yourself, why the price reject from here? The reason, or possibly, is because this was what? Another block here. Inducement, break, mitigate, push down. Price action analysis. Yeah. Sellers, a lot of them came here, push price down. Again, a lot of them came here, push price down. Because this is what happened in the past, this could happen in the future. Is it always a guarantee? Of course not. Now, when we know that the sellers here were not as much as the sellers here, is that the move to push price down here will not take out this low. And that is always a good indication because we know now that, okay, price wants to go up. That's simple price action. So it's like a story. It's almost like you are speaking to yourself and trying to understand, like, okay, good, what is this market really doing? Right?
Right.
Now, we wait again, we go forward. Very good. Now, what is happening here is that, hey, remember, sellers from here had a very huge push here to the downside. These people here, they are not even trying. They're just small push here. They're already tired, right? And now we have this session coming in. Which session is this? Tokyo. We go to what? A lower time frame.
A lower time frame.
Why are we going to a lower time frame? Because on a higher time frame, there is no noticeable point of interest. There's no other block, right? Are you seeing that there's no other block on the 1 hour?
Yeah.
Good. If there's no 1 hour, on 4 hours, it's the same thing. So we'll go to a lower time frame to see. Do we have a bullish order block that we can trade from? Of course not. There is no bullish order block from down that we can easily trade from. This one will need price to break above here before it can come here and go up. This one, there is no order block here. So should we look for an M5 order block? Let me see how the candle on H4 is looking. Maybe. I like the way that candle is. Maybe. So we can go to M5 and see. So M5, I'm seeing this very nice level here. It got tested before, but possibly can get tested again. There's now this one as well. It got partially tested here. So if you are wondering, this is the inducement here, and then this is the break here. Okay, and now tested here, but not deep. This is not deep testing. So price, all of this can serve as liquidity. Price can come down and then go up. You see?
Right.
So now this is where we are. Ideally, for me, this is let me tell you what I think before I play this price out. What I'll try to look at here is where are we coming from? We are coming from, a downward move here. This could be a pullback, what we call aka a retracement, and maybe price could want to come down. So I'm coming here, I'm a bit worried for that. That's one thing I'm thinking about. The second thing I'm thinking about is if I was in a situation where I already have some blue candles or bearish candles, I will be very excited that this is what a continuation trade. But it looks like we don't even have that. And so there's a possibility that we can have what? A double top here, completing that retracement, and then price goes lower. So even though I want to enter this trade here, I have to think about all those things. I'm like, okay, hey, I'm entering, but I could enter and lose money in this trade. Possibly. And if I lose money in this trade now, I will not want to immediately enter at this order block here. Why? Because of the analysis I've already made that this could be a correction and then price might want to go lower. And so for me, I want to see the response of price in this zone. So right now, this is not, I cannot take a limit order here.
Yes.
Good. But now here, this is the open 1:5. Let's see if we get some money from here. It's a loss. So basically now, it means that what? Price might want to go lower. Okay? And what do? It's simple. I don't try to take another trade from here because I don't understand the game. I had a lot of reservations, a lot of concerns. So basically, I'm down 1 hour again here. So from yesterday and today, I'm only up 3 hours. It's not bad. Now I have to just wait for what? And sometimes also, if you have these reservations, you can just avoid the trade. Okay. but I just want to show you that you can take the trades. I don't feel bad losing because it's a signal still, right? And I know that if I take a trade lower, I'll make all this money I'm losing here. So it is still fine. It's not a bad thing. Now, because I have those reservations and because I don't want to put another money to waste, let us just come to the New York session immediately. So I don't trade right up until that time to see how the market will play out. So let's stay, watch. Good. Now you see what we're saying. This year was that good. So if we're here taking a limit order, what could have happened?
Taking you out.
Very good. Now again we are waiting. Again we are waiting. We are waiting. We're waiting. We're waiting. We're waiting. Now price is there. Now look at where price is. We are there. Of course, this market is bearish. Even on this lower time frame, you can actually very, very easily see that this thing is bearish. At this point, of course, this candle has already played, but before this candle played, when you look at this price action, we are still bearish. There is no bullish indication that we should take a trade. It's not yet eminent, it's not yet there, right? But let us just say that we're trying to force it. right? We'll come to a lower time frame to look for bullish order blocks. Again, when you look from behind here, this is a bullish order block. Let's see. We're looking for a good time window, which is going to be, yeah. So if you look here, this is an inducement here. This low here, it induces this low here. So if you look at it well, this low got taken out here. And then we have to move that broke above its highs. Again, with time, some of these things will be easier for you to spot, right? But we've already seen that price has tapped here once, but it is outside our time window. Our time window is 12. So let us, in this kind of situation here, if we are trying, you can put a stop here and then your stop loss will be below this one. Remember, this and this intersect, so you use the lower one, okay? Maybe 1:5, which should be around here. And so we just go. Let's see. So you can see price takes off. It doesn't take tackles in. It's okay. It's okay. Okay. So this one is a miss, basically. But now it tells us that, hey, do you know what? Price is probably now beginning to change bullish. Why? Because on H1, this was our lower high, another lower high. The first one has been taken out. But remember the concept of fake break, right?
Right.
Okay. All of those things are important. Eh? You cannot afford to forget anyone. Now, this one here was the first break. So again, all of this here could be what? A fake break. Remember that we have been exactly like all this move here is internal, but even internal structure can reveal you when price is changing. Okay. For example, internally here, we initially had this break here, but now this first break here is a fake break. That's why we were saying that we can take this buy here. Okay. But you see, with the moment when you have two of them like this, taking a buy here is risky. This is a risky trade you don't want to take. Why? Because clearly structure is still bearish. So one thing that this tells us here is that what? We are changing structure. There's another entry model, of course, that I have that I could have entered a trade here, right? Which is based on M15. There are levels you call psychological levels. If you read the book, you probably have spotted some of you. I think I wrote about them in some part of the book. But let's see if we even have a psychological level. Yeah, M15. No, M15 300. Okay, no, sorry, there's no psychological level entry here. So basically, yeah, basically this will happen. You miss, there is no entry. Let us see if we get even an entry to what 6. Why am I looking at it from here? For me, the way I try to see it here as well is like this thing is getting too extended here. So sometimes when it's getting too extended like this, you have to be careful not to, like, when price is too extended, you definitely expect a correction. So sometimes those order blocks, even when they form, they are risky. Okay, because the price is too extended. And you can even know this by looking at 1 hour. 1 hour, when it start getting too extended, be careful. Especially also if we take our structure. Once we take our structure, usually price wants to correct. And the psychological level, the idea behind it is that when we go up, we come down. There are people here who push price down. When we take them out, we come down. There were people here who push price down. What are they doing that is pushing price down? Some of them are closing their positions.
Right.
Some of them are scared that market will not continue, so they close, and all of those things. So you have to understand this too, that having or setting take profit targets should be based on psychology, right? What are people doing, and what levels are they doing it at? Again, this is a play that has happened and it has left us out. Prices, market is about to close, like the trading session. So it's okay. Now we go out. We are not trading again this day. We go to Tokyo again. The next Tokyo is somewhere around here. Okay, we are somewhere around here, Tokyo. We can come again to M5. Again, M5 just because of this thing. We can look here if we have an entry, but the candles are too small, so I'm going to M15 to see if I can get better candle sizes. I don't see any good order block apart from this one here, of course. It took out this low here and created a high. So this here is significant. The thing I will ask myself is, can I try to bring it down to a lower time frame? It's too big. So even if I try to optimize, it will still be big. Again, this can tell me that like this move is not interesting. So we can or we can actually leave this thing out at this point. Okay, I'm sorry. This was the entry here. I think the entry was around here, 2.5. Yeah, yeah. So this was the entry here. You could have made 1:5 on this trade. Actually, this trade was here, 2.5. Again, this is another entry model. I don't think I spoke about it a lot on that book, but this is an entry, 1:5 basically. But we will not count this towards the total arrows. We'll just leave this one here. Um, the idea is that price here has their psychological levels, price bounces off of. And so if price is moving very quickly, you can still enter. It's the way you can fight against the FOMO and stuff. But yeah, we can just leave that one for now. So let's just play price here. Let's see. Let's see. Um, remember we are at this point, are we bullish or bearish? We are still bearish, right? Because we have had just one H1 break, okay? So it's good to be mindful of that. So what's happening is that outside structure is bullish, inside structure is bearish. Funny situation, right? It's not the kind of situation you want to have. So my theory is that the thing I really like in this thing is that if you can break above here and then come down for a fake break, we know that price will go up very quickly. That would be my theory. Let's see. Of course, now you're still looking for bearish moves. So, but my issue is that in this kind of situation where one side is bullish, one side is bearish, it's better for you to stay out of the market because the real move is a bullish move you're waiting for. So don't waste your money trying to get into bearish moves in this kind of situation, especially when the market is not fast. Okay. So again, for me, I think we can push this thing to when we can think there is going to be a bullish interest, which is the next session, the next New York session. So again, you see, we are not taking many trades, but we are taking really good trades. We want to make sure we're taking the best of the best trades, okay? Very good. Now, what we're waiting for has happened. Are you seeing it? Good. So we've had now two breaks. So basically, internal structure on H1 is smiling at us. Even H4 is probably smiling at us. Let's see if H4 is smiling. So H4 is smiling, of course, because we see that this is the first break, second break. Okay. This is very, very good. Very, very good signal. Why? Because now the only point of failure now is here. You see that we are building the case, right? Very good. So this is our point of failure. This was our daily point of failure. This is now a higher point of failure. So by this point, we know that, hey, do you know what? We are quite confident that price is not going lower than this even. Very good. So we are building the case. You are seeing how we are building the case. We are revealing price, and I'm speaking to you through as the price is getting revealed. Now, again, this is 12, right? This is our what time is this? 6. Okay, we don't trade at that time. So let's wait. Go to a time when we trade. Now we can look for bullish moves. And now it's looking good. Now we are just 1 hour into the trade opening session. Good. Now I want you to look at something here. what do you see here is we have this low, but this low got taken out. So what we'll be waiting here to see is that if we can have this high taken out, come back here. This is a good place to take a buy from based on this candle. So this is what we'll be looking for to happen. Okay. So let's play it and see. Okay, good. So we've had the break. But this candle is too big. So in this kind of situation, you want to optimize it. Like this. Do you see what I've done? Now, it looks here like price is not coming to tack us, right? It looks like what is happening? Price has left us, right? Now,
Yeah.
let us first of all see, do we have the right stop loss? No, it's still too big for me. I don't like this. It's too big. So I go to my normal 5. 5 is good for me. Very good. So I leave it there. And what are we doing? We're just waiting, basically. Yeah, just waiting. So we go, price goes. Remember that we want to end trading at what time? At 16 o'clock. 16 o'clock is somewhere here. That's the last time you want to take an entry, 16 o'clock. Oh, I look again, I'm like, ooh, this thing has gone, man. But there's no other entry, so we wait. We wait. We wait. Now, it's starting to get interesting. Look at what has happened here. 16 o'clock has passed. So we are done for this day. But this POI is still relevant. Don't forget about it. It's still relevant. Okay. So we forward to 1 a.m. the next day. Let's see. Again, I can even go to 1 hour now so that I'm actually building it from a higher time frame. Good. On a higher time frame, we now have a new breakout structure. Look at it. So I want you to pay really close attention to what's about to happen because I think I took this trade there was a trade I took around here. So I want you to pay attention to it. Okay, we are around here. Sorry, this is the place we are around here. Now we're still kind of bullish around there. So let's see. Good. We are still bullish here, but again, we don't have any. Oh, actually, we do when you look from here. Oh, there was this inducement here, and then there was this break here. Price has not come into it. And you can see how price came into it here. I'm sorry that I went too fast, but when you look from the left here, you see something very interesting. There was this inducement here. This was the low that produced this high. It induces these people, sellers coming in, take them all out by this break here. But price has never come back to mitigate this last sell candle. And guess what happened? Tokyo, this was 1 a.m. We are bullish. And what happens? This is 6, so I want to step and allow it at 5. 5 is my most I can go. So at this point, we can leave it there. And we can go to 1:5. At 1:5, at 1:2, I always break even, so I don't lose anything. Okay. Now this is where we are. So let's see. Of course, some cases you want to leave this trade to play right up onto London. But we have a break even here, so we're out of this trade as well. So we leave it at this point. We don't even worry again. Let's just go now to Tokyo, to New York. New York session is around 12. It's around here. We have this point of interest here. I think this point of interest here is also having a weak. Come back here. What did we say here? Order blocks and what? Unfilled wicks.
Yes.
So we are still waiting. It looks to me like that's exactly how this trading is. Like this year, someone will look at this and say the market is not fair, it's a failure, I'm a failure and stuff like that. But the thing is, It's telling you, hey, maybe we don't have enough buyers to control the market here. So we need to go lower to look for buyers at the lower POI. So it's okay, even though this is a break even, it's fine. Now you wait. What time is this? 1. Now, what is happening at 1? This is exactly at 1. Of course, we'll be looking for a bullish POI, right? So this is at 1. This is at 1. 15 minutes bullish POI. Last, we see an inducement here and a breakup, right? So this was our break even here. So what do you expect? This might be a possible buy order, right?
Yeah.
This might also be a possible buy order down here. What will make this one down a buy order? If this one here if this one acts like a sweep, okay? Now, even more interestingly, and this is something I did not see when I was even entering this trade, but when you look at this from here, this order block on the 15 minutes is actually intersecting with this one. Are you seeing it? So normally, if you're supposed to enter the here, your stop loss should have been down here. Are you seeing it? But now this will not be a good attempt for me. So in this kind of situation, all you need to do is just stick to the one below and just automatically know that this will be a sweep. And you see how it plays out. So a lot of people will be buying here because of the concept I've shown you so far. But this is where the real move will happen. Let's watch and see. I want to go for 5, of course. Doesn't make sense for me to go for bigger than that. 5 is somewhere around, yeah. Sometimes I get some of these trades would come and then they will not take me in, but it's all good. It's life. So again, our whole idea is that we want to target possible maybe price can break this level at this point. That's my theory, that's my philosophy. I might be wrong. But now this is what this is about 1 is to 8. Yeah. Now price comes back down. A lot of people are coming earlier to trade here. I wish I showed you this thing. But a lot of people are coming earlier to trade somewhere around here. What do you think happens to them? They get liquidated. But the whole point is because of this is the real area. And what happens? We just go up. So in this trade here, I think that I made about 1 is to 15. So it was somewhere around, I'm not really sure if it was, let's see, maybe it was here where I got, so yeah, it was probably like this. So let's see, it goes up, so good. So I made up onto here, about 11. Yeah. If you actually look, this was the trade here on Instagram. I think so. When you fall to, I think some of these ones, some of them I post, some of them I just leave. But this is somewhere around. Okay, good. This is the trade. So you see, this was the buy limit here. This was that sweep that happened on top, and this was the whole trade from here. You can see, right? So this was like 200 and something, 600 and something pips. But now is your understanding of a lot of things. You see how we have been patient and building the storyline of this trade. Do you understand? You see, it takes time sometimes to build the storyline. We got taken out here, stopped out. We got stopped out here. We got missed out here. We missed this one probably. We got a break even here. But see what happens. 11 arrow, which means that if we're risking 1 arrow here, 1 arrow here, we've lost how many arrows? 2, right? But we've made 9 arrow here. This was a break even, so this is 0. So 9 arrow plus, remember we had 5 arrow here. That's how many? That's how much? 14, right? Okay. Good. Now, sometimes in trading, it's not good for you to be selfish. It's like what I was saying is that when you take out structure, usually markets will reprice. They'll reprice themselves.
Yes.
So at this point here, why take your profit, take some money off the table, take partials. So this trade I showed you on Instagram, I was actually taking partials, not even the whole thing, right? And I was hoping that price will continue to go higher to maybe a higher price, like somewhere around up here.
Yeah.
Do you understand? Now,
Yes.
again, all we need to do is I'll wait for Tokyo session to come because by now I'm already done trading, right? I don't want to be in the market again.
Don't trade.
Yeah. Okay. Now let's forward it to 1. At 1 year, by the way, if you are looking at one, let's go to 1 hour and let's go. There's something I want to show you here is before 1, we need to start to identify your points of interest. This is the last sell candle that swept the structure here. You can see there was a sweep here. At this point here, sweep. And that sweep is actually going to be an inducement. Inducement. And then where was the break? Break was up here. Are you seeing it? And so what that means is that this is a very big order block that we cannot trade from. Don't trade from this kind of order block. It's too big. So what do? Optimize it. Go to the lower ones. So for me, I'll go to 1 minute in this case because even 5 minutes is too big.
It's too big.
Yeah. So 1 minute will be this block here. And that is it. And it is always good also when you find that 1 minute is also an inducement and then break. It got mitigated here once. You can see it got mitigated there once, but it's just one time. So, and normally when a block gets mitigated, you can forget about it. But if you're coming to trade it based on a higher time frame optimization, it's still valid. Like in this case, this block is still valid. So all we are waiting to see here is what Tokyo session to come out. So we are going Tokyo session, about to open at 1. So all of this time, why are you in the market? You are not in the market doing anything at this point. It's not worth it. Have you seen all the times we trade, right? If you don't have a trade at those times, don't trade. It doesn't make sense.
Mostly ranging.
Yeah, exactly. You understand? And that's exactly why we're having this meeting now. Because London session, there's nothing I'll trade. You understand? So the good thing is now you know when to trade, the time, the hours. That's the first thing. Then you know where price is. You know where to get your entries from. You know where to put your stop loss. Okay. Now, Tokyo session is opening. We're very patient. By this time, you're awake, of course. And then now you see these moves, these big bullish moves down. Again, we're on 1 hour. So these very quick moves down are very, very good indication that maybe price will come to this POI. Now I want us to zoom out a little bit to 1 hour. God, this thing is happening too quickly, but I want us to zoom out a little bit so that I show you something. You see that this POI here is intersecting with this POI, right? So my real stop loss is supposed to be below this one, the second one. But I want us to even go a step further. It's like when you go to H4, because H4 structure is very, very crucial. You see that we had this, and then this and up here. So basically, the new structure that we don't want price to break is here actually.
Right.
Because this is the last low that created this high. And so there is a lot of vested interest for us not to break below here. Because the buyers who came here took our structure. It means they had a very good intent. That's why at this kind of zones here, taking sniper entries is usually really, really good. Now, of course, I come back to this idea of the two of them are what? They are kind of the same now. So what do I do?
You go for the lower.
Very good. You go for the lower. So 5,000. Of course, I always want to make sure that this thing is my 5,000. And where am I targeting? I'm targeting this previous one.
Right.
now the good thing with this thing is that because, of course, I'm showing you just a few time frames, but I usually trade and look at all of these time frames. So for me, at this point here, I'm looking at daily. And what I'm looking at here is, hey, if price, because we're here and it was ranging, if price will break this all-time high, because remember, that was the thing we're analyzing ever since, right? You cannot, don't forget about that. Now, if price will break this all-time high here, what are we saying? That if price breaks, we may have higher and higher prices on gold. Okay. And because we've been ranging in this zone for days, if we do break, very high prices coming up. So this is a good point for a swing position where you can have for a week even if you get it right. So this is how you're building your case so that when you put this position, you can even go and not look at charts for 5 days. So this simple trade here can actually be a trade where you can plan to hold for maybe right to 450 or so on.
Yeah.
Now, let's see how it plays out actually. 15, we go. We get tapped in. Are you seeing it? Very quick.
Right.
Now we continue. By this time, of course, I need to explain something to you here before we go on. You've broken even here. Always break even and don't put your profit very far. Just put it slightly above it, like here. So by this time, you've broken even. Make sure when your price goes 1:2, 1:2, always break even. Okay?
Right.
Yes. So at this point, you've broken even. Your TP is above here and price is going up now. So what are you waiting for now? You are basically going back to sleep and getting up around New York session. That's tough. Again, sometimes you can even have an entry again to add to this one. Sometimes I would advise you, I would not really advise to add when it's still very close to this 1 year, because you've not made enough profit to lose money basically on this trade idea. So you can just hold on and maybe start adding profit somewhere around here. Okay. So we start, boom, and then we see prices coming down. You are not worried. You see how we're going. These things don't worry you again. Like, so I've even pushed to the next day even. So this is another, so this whole day here ended around somewhere there, bullish. So this is day one, day two. And then again, we come to the next London session around 1. Yeah, price is still going up. Now we have an all-time high breach. All-time high has been broken. We are still holding. So this is a 3-day trade now. And then now let's go. 3-day. This is day number 4 actually. Yeah, this is day number 4, almost a week now. So let's hold. Good. Now we've banked everything. This is 27 arrow. So if you're risking how much here? Let's even say you take some profit after this all-time high is broken, right? Let's say you take away 50%. That will still be somewhere around 12 arrow. And then you leave the other one to run. Okay. But you see how easy this thing is when you understand structure, who is in control, entries, stop loss, time, price, all those things, right? So it's not one thing. It is all of these things that come together in a beautiful piece. And then it becomes easy now for you to understand what this chart are actually doing. So you see how we've been building the story, right? And when you look at this chart and this chart that I was showing you before now, they are very similar charts now. So if you look, everything we have that way and what we have here, very similar charts.
Very similar.
Yeah. It's just like that. So once you understand these things and it comes to practice, it becomes very easy. When you are losing on a trade, you're happy actually. Do you know why you're happy? Because you have a better entry and you can capitalize more.
Yeah.
So again, you have all of this happening here. We could go on and on and on and on and on. So I think at this point, maybe I can just stop here because we are even very close to where price is currently trading right now. Because price is currently trading, yeah,
Exactly.
yeah,
It's right there.
yeah. So again, this is where you could have had that entry somewhere down here. We held the thing right all the way to here. I made money. So sometimes you see people who make like crazy. I've been holding this trade for days and weeks. It's because they know which points can serve as a swing point and which ones cannot.
Yeah.
Do you understand? So sometimes you
Right.
play on that. Okay, you play on that. Now, where is price currently trading? Price is currently trading around here. If you look at it from daily, for me, I think that based on previous days candle, we can still expect a good push on this thing. This daily candle can still go up a lot.
Right.
I think so. I might be wrong. Now, when you look at it on the 4 hours time frame, this is our low that we know that price should not break, right? And this low here created this high. We had a pullback and then we had a push up. So now this is now the new low that price should not break.
Right.
And where are we trading? We're just trading now within this zone. So this is the zone we are trading within.
So
Okay?
price can do all the
We
gymnastics
can
you
do
want
all
to
the
do.
gymnastics inside here. We don't care. And all I'm going to be waiting for now is I'm going to be waiting for what to happen on this time frame. This is on the hourly time frame. You can already see that hourly time frame is doing something very mysterious here. With broken structure, pullback, broken structure, and then we have a fake break here, fake boss. And then if this thing will break again here, what does it tell us?
You look for them.
Now you tell us that there's now a boss, and a boss. So there are two breakout structure on H1, right?
Right.
And now that is not good for us because if we have two breakout structure on H1, then already we're in that situation that I had shown you before here where one is bearish, another one is bullish. If the main one is bullish, just be patient for this other one to turn. It might take time because when I'm replaying this thing, it looks very easy and that we're just having trades coming in very quickly. But think about it, these are hours that you're not trading, you are just waiting, right? You're just patient. So again, if that thing happens here, I just need to be patient because I'll need a good build up before I can go again to get into trades. And possibly what that could also mean is that price wants to do what? Come lower. Because remember what we're saying here on H daily is that this could be this candle could flip bullish, or what could possibly happen is that we could have a pullback into where this zone here, and then a what? A continuation higher. You see? And now what this will mean now here is that we are now in a position where we're having one break, another break, and then maybe a push lower.
So
Yes, before we can start looking for buys again.
yeah.
So if you are holding a buy position here, let's say this is our buy trade that we took down. If you're holding this trade, you can start already having a signal that hey, it's getting to time. Let me be careful because we might be going lower. We might be going lower.
Right.
So this is just this is trading, man. Like this is trading. There's no way again I can simplify this stuff. But this is it. It's not. It's not rocket science. It just takes time. Okay, some of these things are it gets easier with time, right? As long as you're not over risking, of course, and as long as you are being consistent with applying the strategy, you make money. You make money. And again, the bigger the money you are trading with, like in terms of your capital, the more money you can make. Because this move, for example, I was showing you here, this is 27-hour trade, right? Let's say, for example, that in this 27-hour trade, your account balance was let's say your account balance was 100K and you're risking 1%. How much is that? That's 27K, right?
Lord, that's a lot.
Good. That's a lot of money. Like you can basically live on 27,000, I imagine, in Cameroon for 1 year, right? Or even 2 years. So like, is the idea is that get good at it, get a big account, and then the next is history. And this is basically that I've explained to you. Like, it cannot get easier than this. So know these things: directional analysis, identifying your point of interest, which entry model you use, what time are you trading, what instrument are you trading, of course, as well. Because with some instruments, for example, US 30, you want to trade it only during New York session.
Okay.
Yes, for things like pound US dollars, euro US dollars, maybe London and New York session, but not on Tokyo. So you need to, this also ties with what the instrument. The entry now is everything you do after you insert a trade. Level of failure, re-entry model, and scaling in model, trade management, and so on and so forth. So, for example, in this trade here, there's something I did not show you in the last one when I was doing it, but I actually had a re-entry model. So I did not get into this trade here, but I showed you all the reasons for which you could have entered here. So I tried to re-enter here, and you can see how I got stop loss hit on this trade. Yeah, but then it's a good idea. It doesn't mean now that because, hey, stop loss is hit and it's bullish here, it means I should come and enter. No, it doesn't make sense. It's gone, it's gone. Right? And this is a trade I was willing, I knew I was going to hold all the way to here. But it is fine. I got into this one yesterday. It came all the way here, did not take me, and then, did not break this high, and then came all the way back down. These things happen.
It still happens.
Yeah, it happens, but it is okay. The issue is that the main issue is that people are just not prepared psychologically to handle like this kind of things where you see money and then you don't see it again. Right? Or you
and then after
exactly.
you look at you see
It's totally fine.
what happened.
Yeah, the whole idea is that like there's so many opportunities in the market to make money. But if you're not patient, you're not prepared, you don't know what you're doing, it becomes very difficult, you know? It's not rocket science. It's just very simple. You have to just follow a plan and follow it diligently and don't get too attached to the money. That's all.
That's one thing that makes people lose because they get too attached.
Too attached to the money.
When you start seeing red, you're like, what?
Anyways, man, this is basically everything. I'll stop recording here. I'll share with you. Maybe this will also come up maybe in the training materials on like Confluence Trading Lab. So I'm just telling you just in case you find it somewhere else. I hope it will not be an issue.
No problem. No
All
problem.
right. But
Okay.
yeah, so that at least I don't have to re-explain everything I've explained again to like a whole new audience, right? So so this is it. Man, if you have maybe any questions, you can always ask me. Um, this if you have like chart markups, I trade only gold. I don't want to worry myself about whatever is happening on any other currency because it's just a waste of time. The goal is to make money, it's not to try to understand how every pair or currency works. Yeah. So if you have gold markups, I would definitely be interested to look at them. If you want me to review something, or probably you go through the materials and you do a lot of your own private back testing and there's something you don't understand, you just let me know and then we can pick it up from there.
Okay.